Hello guys and welcome to another video. My name is Mark, I'm an entrepreneur and property investor, and in this video we are going to be going through exactly what I'm going to be investing in 2021. Lots of people have told me I shouldn't be revealing these areas because ultimately it may lead to more demand, but I believe on this channel that we need to be really open and just share our ideas and share exactly what I'm doing. Gives that sort of level of transparency. So this is Whiteboard Wednesdays. We're going to head into the studio. I'm going to go through everything with you. I'm going to put it all on the board. I'm going to tell you why I'm looking at those areas, what sort of returns I'm hoping to generate, and exactly what I'm going to be doing in 2021. So let's go and have a look exactly what I'm going to be doing. So guys, welcome to the whiteboard. It is spring and Nick has changed the colours to green to represent the change in the seasons. We had snow yesterday and today it's much more like spring. So let's go into the figures and let's see exactly what I'm going to be doing in 2021. Now, I think last time it worked really well when I brought this forward a little bit. So I'm going to do the same again today. And Nick, have you got that in focus? He's all good. Excellent. This is my plan for 2021. So it starts off with an overarching theme, which I want to buy about £500,000 worth of additional property. Now, for me, I'm interested in many different areas and many different strategies. Certainly in a market where it's so hot, I'm going to have to be more open to options if I want to get the best possible deals. In some of my markets, my approach hasn't really changed. For example, in Sheffield, where we've got a couple of HMOs, I would be very open to finding another HMO. But I'm also open to a city centre apartment for some service accommodation or any sort of BRR deal that might come up. I'm open to anything along those sort of lines. But Sheffield, for me, I think the fundamentals are still really, really strong. The prices are much less than in Manchester, which has boomed. It's only about an hour away across. It's got good fundamentals in terms of its location. It's got a really good population, a couple of big universities. There's a lot going for Sheffield, a lot of good employment. I think Sheffield, for me, hasn't yet seen its boom time. And I think that's coming shortly. So I'm very open to another HMO, some service accommodation, a BRR type thing over there. I'd quite happily pick up a good deal in Sheffield. The second area that I love is Northamptonshire. Now, Northamptonshire for me has been really, really good recently. I bought over the last 2 years, I think 6 or 7 properties in Northamptonshire. Absolutely love it, getting really good returns on HMOs, also getting good returns on service accommodation. So I'll be open to another one of those. BRR deals, anything, to be honest, I'm open to a BRR deal pretty much anywhere as long as the average house price isn't below, I don't know, I don't want a 3-bed that's under 100 grand really. So as long as it's above that sort of benchmark for me, 3-bed must be more than 100 grand. I'm interested, especially if it's got a BRR element to it. But Northamptonshire, again, the fundamentals really, really strong. Centre of the country, really good employment. It's absolutely been booming for us. We've got extremely good growth in that area. So another hotspot that I'm still very keen to buy another property in. Nottinghamshire, Derbyshire, all across there. HS2 has got a lot of infrastructure being put into those areas. I think Nottingham topped the tables for the fastest growing city in 2020. But look, ultimately, I think it's got really good fundamentals. Again, 2 big universities, house prices very, very reasonable. I think there's a lot of growth in the Nottinghamshire, Derbyshire kind of area. So we're looking for stuff around there at the moment. Again, very open to HMOs, service accommodation, BRRs, anything like that. You'll be noticing that I'm very much focusing around those sort of strategies because it's things that I'm comfortable with. We've got good systems and processes in place and we know what we're doing. We know that we can generate the right returns. Under the HMO service accommodation type model, we're really, really comfortable investing in that sort of product. The next area I've got on here is a bit of a wild card, and I'm going to take a trip over there. And Nick, you don't know this yet, but we're going to Belfast at some point. Now, Belfast is really, really interesting to me. Belfast, average property price in 2007, I'm going to get Nick to put it up here. It was 224,000. And in 2020, Nick, it is over here, 147,000. How are you enjoying putting this around? So that's a massive spread, right? And I think that there is a lot of opportunity in Belfast. It's the capital city of Northern Ireland. There's a lot of growth in the last year. I think it grew by about 6.3%. Still lagged the UK, but I still think there's a lot to go there. If you just look at this disparity in house prices, and with the average UK house price sitting at 260,000, somewhere in that region, to have a capital city in Northern Ireland with only 147,000, to me, seems like that's underpriced. So Belfast, we're going to take a trip over there. We're going to have a look at what opportunities there are. I think that a lot of the money from the UK hasn't really flowed over into Northern Ireland, and there's probably a geographical reason for that rather than an investment reason for that. And I think we're going to take a trip over there. We're going to have a look around. We're going to see what opportunities we can see. And again, I'm very, very open to opportunities over there. I put open because I don't know the market that well. I don't know whether buy-to-lets will outperform, whether it should be service accommodation, HMOs. I'll need to find an entire management team, an entire sort of power team, if you like, who can help me manage the stuff over there. So for me, I'm really open to opportunities over there, but the fundamentals of it being that far below its 2007 peak, for me, is really, really intriguing. So I'm going to be taking a trip over to Belfast. So guys, obviously this is my plan in terms of what I hope to achieve. What we now need to do is look at the figures and the stuff behind it. So I've done another sheet called the returns and capital required. So the returns that I'm expecting, I've gone through down here, and I'll go through why I'm expecting that. But I want to buy about 500k's worth of property, and in order to do so, I know that if I was to put down 25% deposit, I would need to put down £125,000. Now, I expect to leave a little bit less than that in the deals once all the BRR elements and everything else comes out in the wash. I expect to probably leave deployed between £75,000 and £100,000. I think at the moment, in the white hot market that we're in the areas that I'm investing, I'm not seeing many opportunities where you're going to get all your money out. I think that's a bit of a fallacy at the moment. And the projects I've seen recently where people have said that they're going to, they actually either the building goes over, the valuation doesn't come in at the end, for some reason it never quite makes it. And I think a more realistic objective would be, if I could get half my money back in year one, that would be amazing. I think that would be incredible. If I could get 30%, 40%, I'm still winning. So 75 to 100k left in is where I want to be. Now, I've worked out roughly what I think I can get in terms of return, and my target return for this year is to increase my net income by between £2,500 and £3,000 per calendar month. Now, that's net of all the expenses. And I've kind of worked that out based on a couple of the areas that I know. Obviously, we're going to be looking at areas that I don't know so well. So Nottinghamshire, Derbyshire, Belfast is our sort of wild card. I don't know those areas anywhere near as well as I know Northamptonshire, Sheffield. But these areas, I can pretty much do an ROI calculation straight away. And I can say if I bought a 4-bed HMO up in Northamptonshire, I'm likely to spend 150, maybe 160, 170,000 now. Of that, I'm going to get about £800 a month net income. So I can do that calculation really easily and work out roughly where I'll be. In terms of Sheffield, slightly less on the amount of money required to do the deal, slightly less income, but again, really good, strong ROI. I expect to be able to be somewhere around there. I may have to get the money through a little bit of the deals and maybe have to deploy slightly more, and maybe by 600,000. But if I can get anywhere near 24% or 28% at 3,000 ROI, that's a fantastic return. And any investor should be looking at those returns going, that would be incredible. So I've set my targets quite high, and I am aware of that, but I've got a really good team around me. So lots of people have said that I'm crazy revealing this. What are your opinions? What do you think of these areas? I'd massively be interested. Put it down in the comments. And if you'd be interested in working with any of my team, Legacy, as you know, they manage and find all my properties. We've had a good meeting about what we're going to be doing. We're doing that about 7:30 last night, and we really had a good in-depth meeting about what properties we're going to be finding where and for who. And if you want to work with them, look in the description. There'll be a link in there. You can get in contact with me. You can also join the Mentoring Mondays live. There's some resources in there, some deal analyzers, all free of charge. Feel free to download any of that. And I hope this video has really sort of given you some insight into my objectives for this year. I'd be love to know yours. If you want to drop all those in the comments, I will reply. Give this video a big like and subscribe, and I will see you again on Friday.